Can you hear me? Hello. Are we here together now? Let me know in the comments. I'm late. Somebody said I'm late. Amazing. Thank you very much for joining. Happy Monday. It's Monday, y'all. It's Monday. It's not Friday. It's Monday. Best day of the week. Just kidding. Friday, August 19th, 11 a.m. Central. Thank you so much for joining us today. We had a very exciting week, and we have an awesome panel to discuss all the great things that have been happening in the Tesla, Elon, tech, future, who knows what else world. Come on in. Here are our guests. We have Hans, we have Rodman, and a new addition to the community forum, never before seen before. Jared, thank you so much for joining us today, Jared.
Thank you for having me. It's a pleasure to be here.
Of course, man. For those that are not familiar with the format of this, let me turn off the music. This is our community forum. We do these every week where members of my community that have signed up to Patreon or YouTube, we come on together and we discuss the topics that the community wants to talk about. But if you're in the comments section and you're watching this, throw out your comments, throw out your questions, throw out your topics. This is basically fair game. We don't really have an agenda. We might have one or two things we want to touch on, but then we allow the conversation to flow as we get into different topics. And today we'll actually have Rodman kick off the discussion. We were having he brought up some very, very interesting points in our Discord channel, which you become a part of if you do join the channel through Patreon or YouTube. In that private Discord, Rodman was bringing up some very interesting things about the topic we'll kick off with. So, Rodman, I'll give you the mic, and then we'll take it from there.
Before we do that, Jared, do you want to introduce yourself?
Oh, yeah. I'm such a terrible host, bro. Go ahead.
I'm trying to take over your job, so.
No, yeah. Good. It's yours.
Yeah, so I'm Jared. I live in Ohio, and I worked at Tesla for a brief stint. So I brought a prop. You can see the Tesla Roadster behind me. In about 7th grade, I bought that poster, so I've been following Tesla for quite some time.
Wow.
Worked at Tesla for about 18 months in sales in Ohio. And then, probably the first thing that got me big into Tesla was in like 2014, 15. A family friend bought a Model S, and then realizing like, wow, this is so much better than every other car there is out there. Kind of just became a fanboy from then.
Awesome.
What years were you there?
16 and 17.
Oh, nice. Cool.
Yeah.
So like at the early stages of Model 3 ramp, basically, is when you were at the company.
Yeah.
Okay.
And the
actually
early
have a lot
stages
of
a
questions.
major FUD war.
Yeah.
For sure.
Yeah.
What made you move on? What was the decision to move on?
Yeah, so I was working part-time in college was the main thing. And then getting my degree in finance, obviously working sales doesn't necessarily align with a career in finance. But it was a great part-time gig, obviously, compared to anything else you would do in college.
Yeah, awesome, man. That's badass. Cool. Thank you for sharing, and thank you for introducing yourself. Thank you, Rodman, for doing a better job than I am. Go for it.
No, that's no way. So what I've been thinking about a lot was sort of this idea that analysts will never analyze the companies the way we analyze it. So we're taking into account for like what the potential for robotaxi and FSD and an Optimus. And the way I kind of thought about it was sort of from like a physics idea, is that you have like potential energy, which is all these ideas like robotaxi, Optimus, things that aren't really borne out in financials right now, but they're potential things. And eventually they get turned into kinetic energy or real financials. Like once you've actually started delivering the Cybertruck, you can actually start to model that or put it into your estimates. But until then, it's still sort of an anomalous thing that is more like a pretend idea, more of a potential than a real actual physical thing that can measure. So I was starting to think about more like what are the other differences? I mean, and another way to think about it is it's sort of like if you were an owner of Apple in 2000 and you were seeing these iPods, and then you saw on the horizon, here comes, they're going to make a phone, right? And you could tell that to analysts if you knew, but they probably still would not pay attention to you because it doesn't exist, right? So in the same way, Tesla is sort of owning Tesla right now, for me, seems like it's owning Apple before the smartphone. because we just have these cars. No one's thinking about these bigger things. It's like owning Amazon before they had AWS. So I was trying to push this thought more, like what other differences are there? And the other thing that really came to my mind was this idea that Elon shared these technologies, these things that he's thinking about that are years out with the public instead of keeping them to himself. So whereas Apple really was like kind of quiet with the iPhone, right? Or Amazon was very quiet about AWS. They didn't want to release these things before before they were ready, so that people couldn't steal their ideas and run with it. So why is it that Elon's willing to do that? And we can start taking it from there.
Yeah, that was the one thing that when you said that the Elon shares the long-term vision with everybody of the company, whereas every other company is super close to their vest because they're afraid competition is going to come in or steal the ideas, or I don't know, it's a certain playbook that companies have, is proof of how confident Tesla is and Elon is in their ability to be better than everyone else. Like, I think it starts from there, right? So once he feels, because otherwise, why would you say those things? I guess is what I'm trying to think through. So that's the biggest thing that stands out to me. But then we benefit from that as an investing community, that they're so confident in their ability to execute that we get to know what they're doing alongside what they think what they want to be doing in the future. But then the traditional analysts or whoever else are following the company, they're not giving Tesla that benefit. They're essentially treating them as anybody else, as like an Apple or well, let's wait and see how they do it. Whereas we do get insight into that company, and their track record of execution, I think, is what creates that gigantic gap between investor and Wall Street, retail investor and Wall Street. So that's kind of like the thoughts that go through my mind, but I'm curious to hear y'all's as well.
So one of the reasons I think Tesla does so much of this like public display of future products, I think goes back to actually the early days of funding. So in like 2006, 2007, they did a lot of marketing and like roadshows and stuff like that for the Roadster. So they needed to raise the funding and deposits to actually create the product. And then from there, obviously, they had to fund and stuff for the Model 3 and do like the ramp scale there. So I wonder if it's just a continuation of those days and the product cycles and stuff like that from then too.
Mm.
Yeah, one of the questions that kind of I have is that pressure that not wanting to share with people, does that come from an internal thing inside the companies, or is it almost an environmental factor that, people in the public investing community, all your fund managers, kind of basing this off of Gary on Twitter, they don't want to see like so essentially what we're talking about is Elon is opening up about all of the startup ideas that Tesla has. And it's basically like we as retail investors don't typically get to invest in startups. We're just not allowed to, unless you're a very high-end retail investor. And the public market is not the startup investing market. Fund managers who are investing in the public markets and control, 80% or whatever of the money that is in the public markets, they're not interested in investing in startups. If they were, that would be a siloed thing that they did in a separate vehicle for separate reasons. And so they don't want to hear, what are all the crazy ideas that you and your harebrained engineeringness have like planned out in the future. They want to know, how can you be razor focused at doing this one thing that makes you a ton of money right now? And we want to model what that looks like from now until 2035 or whatever. And so, it could just be that for people who are not like Elon and just straight up don't care what institutional money wants or thinks, that they have to play the game of, well, we're going to hold all these cards close to our vest. Like, Google does a lot of these types of moonshots, but you don't hear them talking about them. Like, and I think that's also a good case in point that, public market investors have watched Google try all these moonshot ideas, and how many of those have added anything significant to Google's bottom line? Not much. Like, everyone still models Google just based on search and ads. Like, that is the bread and butter of the business. And so there's, an amount of skepticism that investors have about these startup type ideas being able to be meaningful to the company that's justified.
That's interesting. So it's almost like in the case of Tesla, they are working on moonshot ideas, but they're actually going to add quite a bit of profit to the bottom line if they're able to execute against them, versus the example that gets drawn usually is, well, Google's working on Google Glass and it ain't gonna do shit, right? Mm-hmm. Or Amazon is working on Amazon Phone and this thing is a total disaster, right? Whereas Tesla's like, we're gonna come up with a robot that replaces all labor, and what's the valuation? So that's very interesting too. So it's a combination of moonshot and value to the general public, which then sort of points towards the company being able to become extremely profitable for that, because the public is actually utilizing that technology. Yeah, interesting.
I kind of wonder if like if you just thought about like back in the 2006, before, like when like the iPhone was sort of like an inkling on people's radars, like people were just as greedy back then to like, oh, Apple's working on its next big thing, right? And like there were like little inklings of like that they were making a phone, and it's kind of like today, like, oh, Apple's working on a car, and like it's a secret, right? And that kind of like, I feel like maybe there was more excitement and more drive. It's like, oh, I'm willing to put my money on that because like it's like my chance. Like if if I knew that, then like maybe more people are willing to put their money on it because it's like a chance. It's like a gamble. Whereas with these things, it's like maybe it's already been partly priced in, they believe, or I mean, I think some of it has to feel like, if I'm an outsider to Tesla, that like part of the price that and how it's not justified in their minds, a lot of it maybe comes from, oh, like these people are already trying to price this stuff in there, and then that's why the price is so crazy. So, but I mean,
so you're saying more like an intuitive sense that people are like, well, the reason why it's $900 to share in a trillion market cap is because people think that people are already pricing this stuff in without actually sitting down and doing the math and figuring out that this is quite a bit more incremental than what's already priced in. Is that what you're like? The intuitive sense is that it's already in the stock. Okay.
Right. But I mean, if you actually look at it, it's clearly not. I mean,
yeah,
like it would just be so much more insane than.
Well, and you can, like, it's understandable to get that sense if you're not doing a deep dive. When you just look at the market caps of all the other auto companies, you're like, okay, this is what auto companies should be worth. Now, we're not actually going to dig into the fundamentals of cash flow and the fact that all these companies have so much massive debt, and like their potential to return capital to investors over the next 10 years is basically zero. And that's why their market cap is not very good. But like, if you don't get to that detail and look at the fact that Tesla's going to be a cash flow machine, then you don't understand that that's why there's such a difference in market cap between Toyota and Tesla. And so then, yeah, you just come to the conclusion, oh, well, the simple explanation is that there's a bunch of crazy Elon Musk fanboys out there who think that he's going to make this like AGI Tesla bot that's going to replace the world's labor. And that obviously those people are crazy. So
yeah, they should listen to Gary Black and look at his analysis. Like that's what comes to mind immediately. It's like, okay, look at what Gary's doing. Like Gary's, by the way, for those that don't know, he was on my thing yesterday with Alexandra. We actually bought him a new mic. Kathy K donated $100 on the stream specifically for a new microphone, and we literally shipped him one to his office this morning, and he's going to get it on Monday. We got him a Blue Yeti. So he needs to be heard a lot more, man. Like
he really does.
It was such a fascinating sort of peephole into how traditional analysts and finance and all these different the people with all the money, how they view these things. And the fact that he was able to so methodically and, in my opinion, very conservatively, like super conservatively come up with a valuation model that is almost twice the price today, to me tells me that most analysts don't know what the fuck they're doing. Like, what are you doing? How can you have a price target that's 700 or 600 or even current price when somebody that's coming through and doing this very methodical approach is coming up with a $1,600 price target? And so where my brain goes is like, okay, 80-20 again, 80% of financial analysts are not going to be very good at their jobs, or they're not giving enough time to the story to fully understand it. And maybe that's what it is more than anything, is that they have so many other things they're looking at that they can't actually sit down and fully understand this single story, which is arguably 6 or 7 companies in one. And maybe that's why. Maybe it's not getting enough attention. So, but yeah, that the way Gary Black approaches that valuation speaks directly to what you're saying, which is the company already, one could argue, more than deserves a higher stock price than they have today on the existing business. Forget FSD, forget bot, forget everything else. It's $1,600 with a very predictable target in the next 4 to 5 years, and they don't got to do nothing with full self-driving or the bot or anything else like that.
But you do have to give them execution. Like, you have to bake in the fact that they're going to continue to execute at least at a level that's close to what they have been executing on. That's the one kind of caveat.
So you just have to keep doing what they're doing, though, right? Sorry, Jared.
Yeah.
No. So I wonder too, if there's any like recency bias baked into any of this too, because if you think of any new financial analyst over these past 5 years, the big conversation has been around the bot, Cybertruck, Roadster, and all these things that have been promised within these past 5 years and haven't been executed on. Obviously, FSD has made leaps and bounds. Obviously, production of S, X, 3, and Y has come leaps and bounds. But in terms of innovation to market, there hasn't been as much in these past 5 years, where Tesla's stock price has gone on a run up and the popularity of eyes on it has gone up significantly.
Okay.
Yeah. I mean, the obvious reasons for that are they're so focused on ramping 3 and Y. But I mean, yeah, I guess, I mean, there probably could be some confusion on that. It's like there definitely is confusion on that, because you read in the media that the Cybertruck has been delayed, and the clear reason is they're focusing their money where it counts right now. Like, you could split your effort between adding a new vehicle, but if you can't even satisfy the current demand for your vehicle, it's ridiculous to like throw on a new product line that adds more overhead, and you can't deliver on both of those, right? So, I mean, the media story is one thing, the reality is a different thing, and I mean, they're just never going to. I mean, I guess what I
understand that the reason why it's been delayed is because of the exact opposite of the narrative. People keep talking about, oh, there's going to be a demand cliff. Oh, there's going to be a demand cliff. Oh, there's going to be a demand cliff. And even Tesla believed there was going to be more of a demand cliff than there actually was when rubber met the road. That, hey, we literally cannot produce even close to the amount of Model Ys that there is demand in the market for. And so we thought we were going to like make these Model Ys, and then we were going to need a Cybertruck in order to continue to grow the number of cars that we were delivering, because we weren't going to be able to sell that many cars if we didn't add another form factor into the market. And they're like, no, wait a second. Like, we literally can't sell enough. Like, we can't make enough Model 3s and Model Ys to meet current existing demand. And we're just going to have to like focus head down on that for several extra years beyond what we thought we were going to have to. And then once we finally do that, like, okay, now we've got enough battery supply to where, and we're selling 2 or 3 times as many Model 3s and Ys that we thought we were going to sell. Now we can hit the Cybertruck. And that's like the mechanics of what have actually happened, but people just don't understand that that's what is going on.
I think there's an interesting thing with demand that I haven't seen talked about too much. And it's with regards to like Tesla's brand and everything like that. And I almost don't expect there to be any demand cliff, almost like the iPhone. The iPhone has been the popular phone to get for a decade now, a decade plus. Tesla is the cool car to get. You ask any of your nieces, nephews, kids, anyone of like any younger age, any like 25 and younger, what car they want. Do they want a BMW, Mercedes, Tesla? Everybody's going to pick Tesla. So like there's just so much there that's untapped too, and recognizing the future demand.
Yeah.
Yeah, that's a great point. Like even my children who are 9 and 5, they're friends when we drive places. They're like, I want to drive in the Tesla and instead of their own parents' cars when we carpool and stuff. So I mean,
and it's not like these kids are not driving in nice cars either. Like, you know, they can be in a
Lexuses
BMW, Lexus,
Audi Q7. You know,
shoot at Porsche Panamera, and they're like, "Hey, I want to go in the Tesla."
Yeah, it's still to this day. Like I always find it so fascinating when, like, even when I was speaking with Gary yesterday, you know, one of the things that was brought up was you know, competition down the road. Like there's going to be all these other companies that are coming up. Like I still to this day, and if we're talking specifically about cars, I don't think. And I'm not saying Gary specifically, but I'm still curious, like how many folks actually grasp the concept of there being no competition within EVs. There's competition against gas cars for the foreseeable future when you have a 1.4 billion unit fleet of gas cars. You know, like the way I view it is that say I think the peak auto in globally was what, 90 million units a year or something like that, 95 million units a year. Like I don't see there being a cap to that market until the entire fleet is at least halfway done being converted. So like the way I think about it is we could have a 200 million or a 300 million unit per year new cars being sold until that full thing gets turned over. And until that happens, we're 20, 30 years into the future, you know? So what are they going to be competing against? They're not going to be competing against each other. They're not going to be competing against other EVs. They're going to compete against the cars that exist right now that are gas cars. And I still think to this day that concept's not being grasped. We're putting some artificial limit to how many cars can be sold each year. And then you not even including the fact that you're going to have a lot of first and second world countries that are going to be transitioning into the first world, or they're going to have infrastructures that are going to be able to house a lot more vehicles per capita than they are today. And then you also have the variable of, you know, 4 to 18-year-olds or 17-year-olds, like Jared said, that are finding these new EVs to be super, super fascinating. They're going to start coming into the market as new buyers, and that's going to spur a gigantic amount of demand. Then you talk about the self-driving technology and how that's going. I mean, there's a lot. And again, this is future. It's hard. I understand why it's hard for some to conceptualize this and put it into the financial model, but not including it, I think, is not the right approach either, because I think there's substantial evidence that shows that this is the likely scenario. So we should somehow factor this in, but I get it if we don't. You know, Yeah. But I do. You know. Yeah.
How about this? I just want to kind of blow your mind. Do you remember the
No, please
picture?
don't. Please don't. Okay.
Remember the picture he sent of I'm going to post it in the chat here if it's going to paste, but it's the
put it on the private
tweet.
chat.
Yeah.
It's not posting.
All right,
I think YouTube just hates links.
So this is the picture of the port in Shanghai where there's 10,000. This is the one I was trying to count, where it's like 10,000 Teslas, right? It's like thousands and thousands of Teslas. Or maybe this is the wrong one, actually. But when you see that picture and you think that's 10,000 Teslas, like just all lined up in a giant, like grids, that's like 1/6 of the number of cars that are being sold in the California every quarter. Like it's like 70,000 cars every quarter, right?
Yeah.
And
it's crazy.
Like you see 10,000 cars and like that number boggles your mind. But then like 6 times that is the number of cars being sold in California every quarter. I think that's the number. I could be completely wrong. But yeah, I mean, that's going to happen everywhere eventually,
Yeah.
right?
Mhm.
Because it's happening here, and I feel like California's been very ahead of the curve, and it, but like I see the same patterns like starting to form out in like other places, and we're not even close to saturation here, not even close.
I've
But
noticed
like,
that. I can tell you around these parts in Austin, we are seeing so many more Teslas driving around right now. It's kind of
yeah,
mind-boggling. I don't know if you're
yeah,
seeing that, Hans or Jared, where you guys are from, but man,
Definitely
it's
more,
going to
but
get
it's
even
not
nuttier.
like when I go into the city, like if I hop over to Dallas, it's way more than it is here.
It's
Yeah,
absurd
so
everywhere. I mean, sorry, go ahead, Robin.
no. I mean, because I know where you guys have been at, and like it's been like every year, every quarter, it gets crazier and crazier because you're like, it used to be like, okay, I would see one a day. Like I would go on a drive and I would see another one and I'd be like, oh yeah, another Tesla. And then like you would start to see them more. And now like I swear they're more common than like Honda Civics. Like it's
well,
crazy. Like I'll like to get my specific car like combination and pull up next to someone who has the exact same car combination. I have a red Model Y with white interior, and it's like it's pretty rare. And like I've been like in a place where like there was three of us with the same configuration. Like it's just like it's so rare that like you see one another one, but like now it's becoming so common. Like that's how many cars there are. It's and I think like when I still look around, you know, we're still like 1 in 10, 12 cars. I mean, even though they're that common, but I see this trend. It's going to happen everywhere. And it's like you said with the iPhone, Jared. It's like, whereas like the iPhone was once like the people in the know had it, like eventually it became like everyone had to have that or the Samsung version of that, right?
you know
So
what's something I've started to notice that you bring that up as a thing. Do you guys remember? So like the iPhone time. Do you remember when iPhone first came out? It was either around that time or right after that. There was always a set of quote unquote competitors that would come out with a product that the iPhone was going to be. So for example, iPhone, I think it went from iPhone to the iPhone GS or the 3GS. What was the
3G,
second?
3GS, yeah.
The 3G, that's right. So it went from iPhone to iPhone 3G. But before the iPhone 3G came out, there were all these competitors that were coming out with products that the iPhone 3G was going to have, like 3G and I don't know, better camera, better screen. But it was always a significantly more subpar experience than the iPhone. It didn't have as big of a screen. The screen was dog shit compared to the iPhone. Super slow, really bad battery life, terrible app ecosystem, right? But they were still saying like, look at what we have. We have a 3G phone that's cooler than what the iPhone is.
iPhone killer.
And then the iPhone comes out, the 3GS or the 3G, and it's orders of magnitudes better than whatever else the product was going to show. I'm starting to see this now with electric vehicles, whereas before it was just Tesla and nobody. Right now it's Tesla, and then a competitor comes out before the vehicle segment or the thing that Tesla is going to come out with, like the Bolt, for example. The new Bolt from GM. It's I think it's under $25,000 with the EV tax credit. Very affordable, cheap car. But what's the likelihood that the affordable Tesla is going to be orders of magnitude better than the Bolt? You have the bot from Xiaomi, whatever the name of that company is. Look at our humanoid bot. It can give you a flower. Okay. What is that going to look in respect to the bot? F-150 Lightning in these pickup trucks. I'm not saying it's a bad
Rivian,
product.
yep.
The Rivian, it's in before the Tesla product comes out, but then when Cybertruck comes out, what is that going to look like? I'm starting to see a lot of similarities between those two sort of product segments coming through. And if we use history as an indicator, once that new product comes out, then from the company that's leading, it's likely that I'm not saying going to say it's likely, but it's fascinating to watch if it's going to play out the same. Because if it does, then why wouldn't we use the Apple versus everybody else analogy and product segments to try to model out what Tesla's going to do? Even if it's a phone versus a car, it's still the same consumer. The consumer is going to behave very similarly. It's just a different type of product, right?
So I think there's a stark difference in these iPhone examples to Teslas and cars. So about like probably a month ago, I drove an F-150 Lightning, and honestly, fantastic vehicle. I drive a Tesla. I would never trade it in for a Ford EV though. It's a fantastic work truck, and that is going to be the niche it fills. Obviously, some pricing and stuff like that is going to be a little different. It's a very expensive work truck, but for what it is, it does a fantastic job. And I don't ever see some of these Teslas like, I don't know, a Model X or even like the Cybertruck. I feel like it's a little bit too much to be a work truck at the beginning, because obviously it's going to come with a high price tag. They're going to sell the ones that cost the most first. So I don't know that they're going to fill that niche at the beginning. And then the super luxurious stuff like Lucid does a great job of catering to like the S-Class buyers. Whereas Tesla, it's very much a tech company. Everybody knows that, and that's how it's valued when we go back to stock price and stuff like that. But I don't know that Tesla is going to be the end-all be-all in the space.
Okay.
So I have a slightly different take on that, and I'm going to reference Mr. Beast. So one of the points that Mr. Beast makes is that, like, one of the things that creators don't appreciate is that you really need to like obsess over the quality of your product, and that like you can put, say, 3 times the amount of effort into making one video, and that video will outperform, like you'll get 10 times the amount of views on that video by putting 3 times the effort in. And so it's an exponential return on investment. And I think this is the thing that Apple has done that makes it so good. It's like they're not the first to market, but they're the first to get it right. And they do put in that extra effort, and that extra effort provides such a superior experience and product to the consumer that it is the thing that captures the whole market. And like, I mean, there are a ton of Android smartphones out there made by everybody under the sun. And those are not the products that end up capturing the majority of the profit in the smartphone market. The iPhone owns smartphone market profits, basically, period. And I think it correlates with what Mr. Beast has said. You know, you can put out 10 videos or you could put out 3 videos. And if you put the same amount of effort into the 3 videos that you put into the 10 videos, you'll get more, like probably 10 times more views on those 3 videos than you did on creating the 10. And so there's like that inverse return on investment there that Tesla, they know how to get the product right. It will take them a while just because of the limitations of the supply chain. It'll take a while for a Cybertruck to ramp up. And I love what Ford is doing. I don't understand how Ford can survive in a landscape where they have the amount of debt that they have. And they'll sell Lightnings, but will they sell enough Lightnings to not go bankrupt when they have this massive overhang? I don't know how they do it. And I hate that, because I think the Lightning should be a great product. Like the Mustang Mach-E should be a car that sells a bunch. And if it was made by a company that didn't have all this overhead from their legacy business, I think it totally could be successful. Maybe there will be enough capital in the market to support them through the transition and they'll be fine. But yeah, like they need a product that can really pad the bottom line with profits. And I don't know how you do that when you're facing Cybertruck. And this is, kind of my, like, I don't understand the business case for Rocket Lab. I love them. I love their product, but like, you're going to be operating in a competitive environment with Starship. Like, how the heck do you do that?
That's a good point.
God.
So
I think there's an interesting thing though with the Mr. Beast comment. So I recognize, someone who makes like fantastic products, you're always going to want to go to them. But just because Mr. Beast is making the best videos on YouTube doesn't mean you only watch Mr. Beast videos. People with their cars, they like to try variety. And if they have a Tesla for 10 years, they might say, hey, I want to try something else. That's how obviously Tesla's gaining market share. They're taking these people who are car shopping and they're bringing them into the Tesla community. And then we can dive into margins and stuff like that. I have a bunch of stuff I'd love to say on that. And I think Ford and GM and stuff like that. I tell my wife all the time, I don't think GM's going to be around in 10 years.
No.
Yeah.
How dare you, Mary
His lead
Barra?
is eating.
Come on. Go ahead. Sorry, I had to say that.
No, I think it's interesting. I think one of the biggest differences, like trying to compare like these markets, like the Android, iPhone market, and then Tesla, it's like, I mean, if you want to only look at the EV market, like I still just don't see how someone competes with Tesla because
Mhm.
they've been thinking through the biggest limiting factor, which is battery. And like if you haven't nailed that down and you haven't been working on that for 5 to 10 years, like
But I
you're just going to
think
be so far behind, right?
I think Jared's point though is that the market is so stupidly big that there is room for others to play, regardless of
Yeah.
how dominant Tesla is. Is that
Yeah,
correct?
but
Yeah.
I would say
agree
too,
with that.
Go ahead. I was just going to say,
saying. Okay, go ahead. You first.
No, keep doing that. Keep going back and forth. It's fine.
I was just going to say. So I think when we talk about the competition, I think there's less competition auto manufacturer versus auto manufacturer than we realize compared to competition amongst supply and just in the EV revolution, everything like that. Once you start owning an EV, you never want to go back. And I think
Right.
once people start to realize that, demand is just going to skyrocket. It obviously has over these past few years. It's beaten projections over the past like 10 years for what they thought the EV space would do. I think that's only going to accelerate going forward. And I think that's where competition has the room actually to encroach.
Yeah, and I 100% agree with that. There's a lot more room for more products than just Teslas to be successful. Yeah, my main question is around who can supply that demand. Like
Who
what
has
are
the
the
volume,
companies?
right?
Yeah, well, the volume, the margins, and the business model to make it successful. And so, yeah, like you said, you have lots to say on margins. I'd love to hear your perspective on that, Jared. And I guess I'll preface this just by saying, Gary was just talking yesterday in the interview about how he sees some automakers, mostly in China, like Baidu and Xpeng, like they're investing more in hardware than Tesla is on AI, and have some qualms about his perspective on that. Anyways, but then he didn't, when he projected, okay, who are going to be the biggest automakers in 2030? He didn't mention any of those Chinese companies. I'm like, you are telling me that today the people that are doing the right things are Tesla and Chinese companies, but in 2030 that Volkswagen and Ford are going to be the number 2 and 3 behind Tesla. And I'm sorry, they're not getting software right. And to me, that's honestly, I think that if you could create an ICE vehicle that competed with Tesla on software and UI, the fact that it didn't have an EV powertrain would not nearly be the drag on it that not having the software would. And yeah, so I didn't understand that. But anyways, with that as a kind of a setup, what are you seeing as far as margins, Jared? And yeah, where do you see all of this playing out in business models at work and companies that will be successful?
Yeah, Rodman, real quick, I want to make sure you have enough space to talk. I definitely cut you off earlier, so I didn't know if you had anything to follow up and say.
No, that's good. It's
Yeah, I just think
I love it. He just muted himself.
just walks away. Yeah, so I think there's going to be a shift, especially in labor, and I think it's almost scary to think about, and I feel for those individuals that are definitely going to be possibly out of jobs and stuff like that, because obviously there's the shift in training towards like electric vehicles and the software side of being such a vital component of these future EVs. But if we think about like the dealership networks, and this is just like such a big piece of fat along the supply, or not the supply chain, but just the buying process for consumers. Mm-hmm. And it's just like they don't need to be there. And it's interesting what is going on with Ford, because they're starting this direct to consumer model where they're kind of bypassing these dealerships. And I feel like the dealerships are probably going to sue the heck out of Ford for this, because they're taking away, their reason for existing. I'm super pessimistic about the dealership networks in general. There's going to be a lot of legislation going back and forth. Obviously Tesla went through that time where in a lot of states they just couldn't sell because they were direct to consumer, and there are ways they skirted kind of around that. So like, I know specifically like in Ohio, when I was working at Tesla, we kind of supported Pennsylvania and Michigan as well as just Ohio, because there were so few like sales regions. But Pennsylvania, you couldn't sell a consumer a car. So you would have to kind of like walk them through the buying process of what it would be like if they were to purchase it, and then allow them at a computer screen in a Tesla store to purchase it themselves.
I remember that.
And it's just like so much ridiculous stuff going on with there. So that's the dealership side of things. But then when you look at service, obviously it's going to be an interesting component with what happens to service, because it's going to be so expensive to maintain an ICE vehicle, just because there's going to be less parts. There's so much more complex, because one of the selling points too for a Tesla is like sort of over 3,000 parts less than an ICE vehicle. Well, you have more just like inventory you need to keep up with if you're a shop. You need to not specialize in these like easy EV vehicles where you need to have this broad knowledge set. And obviously, like a car's a car. So like even a lot of service technicians for Tesla, they come from BMW, they come from Infiniti and Mercedes and everything like that. But it just really is a massive, monumental shift that's going to be happening on both these sides. And then when you look at Ford and their margins and stuff like that, and GM and all these, it's hard to be optimistic. I mean, obviously, none of us are optimistic about the livelihood of these companies in the future. But I don't know how you could be optimistic about a Ford when, you know, they came out with a Mach-E and they're losing money on it, you know?
Yeah.
Real quick, I want to give a shout out to Buck. Buck, thank you so much for the $5 super chat. Mary Barra created the iPhone. She also created the Apple, not the company, literally the fruit. She's old. Thank you, Buck. Dude, he's always got such good zingers in the comments section.
Yeah, he does.
Sorry, go ahead. Wasn't sure if y'all had any comments on top of that. Rodman came off of mute. Uh-oh, here we go.
No, I don't know. I think you've totally hit on like every point that I feel like we've been trying to hit for the last 4 years.
So the one interesting thing though about the dealership model, which Jared brings up, what is the likelihood that actually does get removed from the equation and that manufacturers are able to pocket that difference? You know what I'm saying? Because the dealer's making 7 to 10% on the transaction between the consumer and the supplier. So if the manufacturer is able to pocket that and just go direct to consumer, then their margins all of a sudden go from 7 to 15, or from 10 to 20. It becomes a significant change. What is the likelihood of that happening?
I think it's just too hard to measure. It's such a massive shift that obviously they're going to need to help their workforce transition to different jobs and stuff like that, that it's just not even from a dollar perspective going to be worth it for them in the short term, that we can't even imagine what it's going to be like in 20 years for a dealership side. Obviously the service side is very different because, sales are very thin margin for them. They make all their money on service. And when you take that away, that's the question of like, are they going to be able to, keep afloat when they don't have the service revenue on their ICE cars?
Yeah, I mean, it's classic disruption, right? This is it's disruption like on a massive scale. And I mean, it's no wonder that there's a lot of money targeting Tesla. I mean,
so one of the things that I think on for Ford specifically, they split up the company and there are two different entities right now. And I think that this is, or at least my sense from the outside, I haven't heard specific commentary, but that is one of the ways that they'll be able to manage that transition away from the dealer network is like, this is a new company. It's a completely new entity. It's not held to any of the agreements that were made with whatever dealer networks in the past. And like, we're going to renegotiate everything from the ground up because this is a completely new business. And, you talked about disruption. The book, The Innovator's Dilemma really talks about how, like, in order for an existing player to make a technology transition, like they need to spin off the new company and it needs to grow on its own organically with the market as the market grows and displaces the old market. And so structurally, I think Ford is doing some of the right things, but I just don't know if it's going to be enough. And you do have to give them props that they've survived many more transitions than any other existing American car company.
That's true. Yeah, that's true. But I think I agree and with the notion that it's going to be a completely different company, whatever that is, and the dealer network cannot be part of it. It's just too much of a drag. It's too much of a drag in a model where the car is built to be as reliable as humanly possible because the market leader is doing exactly that. Like the forcing function of Tesla ensuring that they're maximizing for reliability so that they can remove the cost of the servicing. Tesla bringing service in-house, I think, is a very under talked point that really is a gigantic forcing function to ensure that the consumer has the best possible experience in the long term, especially. They don't get enough credit for that. And yes, I'm biased. Okay. I worked in service distribution for 4.5 years. So screw you if you disagree with me. Just kidding. But it really is, because you think about that forcing function that does. Okay. So service in the P&L for Tesla, you can very clearly see it. It's not a profitable line. It's a cost. It's a cost that brings out the profitability of the company. So what is the best way for Tesla to ensure that it's profitable, or to ensure that it's not as big of a drag on the company? Either make it profitable or make the cost so damn low that it becomes negligible within the context of the entire financial structure of Tesla. And that's the direction that Tesla is going towards by building cars that rarely, if ever, have problems over the long term. And that's a core competency for the company. In a world where EVs become much more adopted, that is a forcing function on everybody else to ensure their car never breaks, because who the hell wants to deal with that when they can buy a car that never breaks? It's such a long term, it's such a brilliant move. But it doesn't get talked about because they do have some service issues today. They do. Like it's regional, and it's some parts, and I saw it. Like I was there. It sucks for the customer. It's the vast minority, but the vast minority go through some shitty times, and they're vocal, as they should be. That's how we get better.
Yeah.
That is a very underrated, I think, point to this day. But that in itself renders the dealer network obsolete in the long term, because why do you need a dealer network when the cars never break? It just doesn't make any sense. I'm curious to see how long that's going to take, and it's going to be a necessary step. But talk about the drama that's going to cause once that starts to happen in 5 to 10 years. Like I wonder what's going to be dominating the news: Tesla becoming the biggest automaker, or hundreds of thousands of people in the States losing their jobs because the dealer networks have to shut down. Like which one's going to be the story, and how gradual is it going to be? I don't know if you guys have any thoughts about that, but that's how I think about it. Yeah.
It's, I mean, just kind of like on a different idea, but like kind of related to this. We had a mobile service guy come in, and I was just like chatting with him, like as I'm wont to do. And he was like, I was like, how long have you been working at Tesla? And I was asking him about like all of his other friends. And he was like, well, one of the things seems to be that like a lot of people with tenure, or like who've been there for a while, get hired up by these other companies like Lucid and stuff. And Rivian, and like they're trying to pull in all these EV like people who have worked on EVs and service to those kind of these new EV startups. But it's interesting that they're like, it's forcing these companies to pay like more to these employees to draw them away from Tesla. And maybe Tesla doesn't need to raise up their price, because they can just pull in all these other people. Because like this guy, like who was a mobile tech for Tesla, he was a former Audi tech. And so, like Tesla will pull these people in through the door. They'll keep getting people, and then they'll get, they'll be training these people for these new entrants who are going to be paying them more to keep these service people on. So I think that's kind of interesting and related, but I don't know if you guys have.
I think the financial piece of that can't be understated, because if you compare an employee speculating, should I go, theoretically, if I have the skill set to be working on these EVs, do I want to go to Ford that has this 100-year-old stock that hasn't do anything? They're going to hopefully make a few % margin. Or am I going to go to Tesla, where they have these massive margins and make a lot of money? They're pushing innovation in this space and have been for over a decade. And who knows what the future looks like? I mean, you go back to your investment theory of like, you don't know what's around the corner or what's going to be the most impactful to the bottom line. We don't know. Like, I feel like that's intriguing as an employee.
Is that what drew you in when you first joined the company, or was it different? Was it different things?
No, I think the fantastic product really drove me in.
Yeah.
I think that's what draws a lot of people in. They just want to work on what's cool, right? Yeah.
Yeah.
Well, and just the cultural cachet of that too, that there's so many, like the cool people are Tesla people, and so obviously that's where you have to go. Like you have to start there, and then if you go somewhere else eventually, then okay, but like you have to start there.
But the point Jared makes is so interesting because that becomes more and more a variable for people to want to join the company the more we go into the future, because that becomes it becomes a very big point of Tesla. Is like Tesla is a company that's making so much money and their stock is going up, and if I go join the company, I know that they're going to be just fine and I'm going to get a piece of that pie. Like I wonder how big of a variable that becomes, because before it was more potential. Like it was 100%. The reason why I joined them, it's because super awesome products. I want to make sure this company succeeds and it looks fun as hell. So I'm going to go join it. Right. But now in 2023, it's going to be, wow, Tesla's making $20-30 billion a year and their stock is doing extremely well. And I get to work on these cool things. Why would I, to your point, why the hell would I ever go work for GM? Like that doesn't make any sense. Interesting stuff.
I think it might be more visceral than that, because I don't think a lot of people are going to be following the financials. Like, I mean, as a like unless you're very financially minded, or like even I don't think a lot of engineers really probably are following.
I don't know.
Yeah,
I mean,
maybe.
A lot of people know that Apple makes a lot of money,
Yeah.
So I have a great story. Sorry to cut you off. I have a great story about this. So, obviously I said I have a background in finance, so I'm very financially minded. But I knew a story from someone who wasn't financially minded, and it was this exact situation, except with SpaceX. So this gentleman, I met him probably a year or so ago, and I don't mean to pick on him and keep him anonymous. But when he graduated with his degree in engineering, his bachelor's, he was offered a job at SpaceX, went through all the interviews and stuff like that. But they were paying I don't remember if it was like $40,000 to $50,000 per year, which out in Southern California is obviously very low relative to average income and stuff like that. But obviously he had equity in the company he could have gotten, I'm trying to think, maybe 5-6 years ago or whatever, he graduated with his bachelor's, and that would have done tremendous things, even though it's still privately held. And obviously SpaceX equity is going to be worth a hell of a lot more one day too. But then he took a job at, I probably shouldn't say where he took a job, but it was very a legacy company doing something, it wasn't vehicles or anything like that. It was actually in the food industry, I'll say. But yeah, he took a job there where it probably paid him twice as much as the SpaceX job. He loves his job, so good for him. But there's that opportunity that I don't think others measure in the startup space, when they're just coming out of college.
Yeah. Well, and I mean, this is already a factor. This is why Tesla had literally 3 million applicants in 2021. How insane is that? Yeah.
Dude, the resume process when I was there, and I was trying to find, that there were so many different. I was constantly part of we need to find people to add to the company process. That never really stopped. And the amount of high quality resumes you have to parse through, it's kind of dumb. There's so much. You literally have, HR will send you a well, first there is a filter that everything goes through, that anything that's the resume is just it's obvious that it doesn't apply. Somebody just is trying to mass send resumes everywhere. Those move out. But then HR, say for one role, HR ends up with maybe 300 to 400 legitimate resumes. And then out of those 300, 400, they pass on 20 or 30 to me for one position. And then I'm going through these resumes. I'm yeah, I just all of them. Just bring them in. We'll talk to them. Just bring them in. We'll talk to all of them. And that was I can confirm that it's quite wild. Just how many applicants they get, and it's always fascinating to see just the vast variety of backgrounds that we get. But they all came in with the same mindset of yo, Tesla's really cool and I want to be part of the mission. Tesla's really cool, I want to be part of the mission. And this could be for warehouse worker or analysts, and it's we're drawing people in from all these different fields. It's fascinating. The variety of talent they get is also what's really cool. And I think that's what's also a strength of Tesla, is that they get a lot of varying types of people joining the company from very vastly different backgrounds that are working on the same things. And you get such a different approach to problem solving, and it's a really cool thing. It's a really, really cool thing to see. Yeah.
Yeah.
Go ahead, Hans.
And that's just the flywheel. if you have an unlimited pool of the best people in the world to work on the coolest projects in the world, then
You win.
you win. Like, you can't help but win.
Yeah, it's as good as history. Jared, do you have any topics you want us to talk through since you're new to the panel? Let's give you the spotlight and see if you have anything you want to talk about.
Yeah, I know this kind of topic sometimes puts people to sleep, but I'm interested if you guys want to dive into it because it's Tesla related. It's going to be the Tesla insurance.
Okay. Yeah.
So I actually work in the insurance space, and I just think it's really interesting what's going on with Tesla and the telematics that the car uses and everything like that. Like I said, I live in Ohio. I have a Model 3. I have Tesla insurance for my vehicle. And I just have to say it's a fantastic product. I don't know if you guys have the opportunity to have Tesla insurance where you live. I know Farz, you're in Texas, so I believe you have it offered there. But just if you guys have experience with that, I'd be curious to hear about it.
I haven't yet. I know that they've offered it, but I haven't looked into it quite yet.
Yeah, we have a 3 and a Y on it, and my dad's S is on it too. My dad is actually he was a VP of actuarial department here in California, so he's in insurance as well. And he was. I mean, the way I think about it is, you got a couple factors that just completely changes the game. First, you're insuring only one type of vehicle. You're not insuring like a broad spectrum of vehicles. So you kind of can, if you have a lot of data on that, you're going to have a lot more reliability in your numbers of like how many cars you can expect to crash. So because you have to cover all those things. The second thing is, like the safety features is going to reduce the cost if you make a car that's safer, right? So if you avoid crashes, which FSD and autopilot and all these ADAS features do, they reduce the incidence. So you're going to have less percentage of vehicles crashing. So you don't have to cover all those. And the safety feature goes another level, is if you build cars that are less likely to have injuries, you're going to have less medical lawsuits or a lot less medical coverage that you need to cover. So like all these things are just pushing the price down, and like you're gonna, yeah, it's absolutely brilliant. And then you add on the layer of like incentivizing people, right? You can't do that in California, which is weird, but everywhere else seems to be. Yeah, so you're going to have people having less accidents. It's just it's another flywheel that's going to reduce the cost. And why would I want to pay for insurance with someone else where I'm covering like their less safe car, when I could be paying for just people who are like, I'm in a pool with people who are in much safer vehicles.
Well, and it ties back to what Farzad was saying about, having the closed loop of service creates a forcing function within the company to improve the reliability of the cars. Having a closed loop with insurance creates a forcing function to make these safe. I mean, they were already the safest cars on the road, but now they're going to know like exactly how do I make an improvement that we can measure in dollars, like the impact of this improvement on the overall safety of everyone on the road. And then, yeah, like you said, Rodman, like it's not only the active safety features, like the structural safety of the cars to begin with. So when someone else hits you, your passengers are less likely to be injured because your car is structurally safe. And then you have control of, hey, like I can keep my car from hitting other cars because I have all these active software safety features. And so, yeah, it's just, like you said, a compounding flywheel of impact. And then from a data perspective, that because they're fully instrumented, that they have so much more data to create so much more granular actuarial tables, and they can charge dynamic pricing to you based on the risk that you're introducing into the system. And hey, if you're a risky driver, we don't have to just say, oh, you're a 21-year-old dude who likes to go fast, you're probably going to kill more people. Like some 21-year-olds are like the most granny drivers ever, and they don't have to pay the same insurance rates as the normal 21-year-olds. And so they're just, compounding benefits across the board.
Yeah. for me, the insurance piece, the thing I wonder is like, how did Tesla end up providing insurance in the first place? And this conversation around data is fascinating to me, because I wonder how much of these new products that Tesla, or these new things that Tesla is looking to release in the future, how many of them are born out of a need to gather data to better their products, and then a product line becomes obvious once they start going down that path. So like the insurance thing, for example, the forcing function to improve safety, the forcing function to reduce cost to the consumer, so on and so forth. I wonder how much was Tesla be like, man, I wonder if we could somehow incentivize the customer to drive as safe as humanly possible, and how do we gather data so that we can best decide how to make the car safer and make it so that the self-driving suite gets better over time. And I wonder how much of that was just people were like, well, if we start gathering all this data, or we have this sort of system in place, it's basically like insurance, like if we understand all these things that are going on, let's just offer the product and monetize it, and like, how does that sort of play into future things that Tesla is going to look to do? Like, what are the things that they're looking at from a data perspective that they need to gather that then turn into product lines? And I don't know if that's a thought that actually makes any sense, but that's sort of where my head goes to. But for insurance specifically, I don't know how big of a long-term sort of profit center that's going to be for Tesla, if Tesla's going to have the cheapest car, period. Like, or the safest car, period. Like, how much does insurance? It's like kind of like life insurance at that point. Like, life insurance is quite cheap per month. It's like or per year. It's not that expensive, but people have it, and it's important. But is car insurance going to turn into that long term, and is it really going to add that much of a bottom line to the company?
I'm sure it's an opportunity cost thing as much as anything else. And I don't see how it was not born out of, hey, if we want to operate a robo-taxi fleet where there are no human drivers responsible for the vehicle, insurance has to be responsible for the vehicle. Do we want to outsource insurance to someone else who is not Tesla to dictate to us what our pricing model for operating this robotaxi fleet is? Or do we want to vertically integrate that and bring it in-house? Like, it's inevitable. If they're going to operate a robotaxi network, insurance is like one of the number one things that has to be figured out, and that's going to drive a huge portion of the cost structure. And so how do you not say, yeah, I want to be in 100% control of the cost structure of my robotaxi business, so I can't let a third party control the insurance costs?
It's end-to-end experience. Like we were talking about the Apple comparison, it's almost like Apple, buying Verizon and owning the network. Yeah, Farz, you're pulling up comments. I have to say, this is like the best comment. It made me LOL. It's from Nicholas Shanks. You can only get Tesla home insurance if your house is built from Boeing bricks. That's hysterical.
Where is that at? Let me find it.
Probably like a minute or so ago, 4 minutes ago. Yeah. So here's the edge Tesla has. And I think, when we talk about why they might have done it, my first assumption is in insurance, you are doing a lot of estimations, whether it's actuarially or just, general business assumptions on the data, what's going on, the trends, frequency and severity, losses that have incurred but haven't been reported yet. Tesla has that data. Most insurance companies are waiting till you call them to file a claim. As soon as someone hits your Tesla, Tesla knows about it. And that's their edge, is they can estimate claims based on, watching the Sentry mode vision and stuff like that. So they have such an edge because they own the hardware. Most telematics insurance is either a plug into your car or on your phone. That doesn't tell the insurance carrier much. It tells them maybe those 5 rating factors that they use to rate your insurance on. But it really tells you nothing about the hardware of the vehicle at that moment. So I think Tesla Insurance just has this massive edge from the data because it's just an end-to-end experience. And then when we talk about the end-to-end experience, again, you can take a shot every time I say end-to-end experience. But so I just think, when you have an experience of a Tesla where it just makes sense from a charging, from a maintenance, even from an insurance perspective, that's where I see Tesla dominating, is just they're doing every component of driving a vehicle the best way. When you do something the best in every category, what reason is there to buy another car,
Yep. That's exactly what I was thinking. It's like, what was the impetus for making Tesla insurance? And it's like, is there a better way to do this? Is there a first principles way we can just make this
Mhm.
like a cleaner experience for people? My wife like scratched the side out of our Y within like when it was delivered. It was like 3 months, and she like kind of drove like cut a quarter and like hit a pole and like and we were under Tesla insurance, and like it was so seamless. I mean, it was great. Like
Mhm.
it took a while because they were ramping the Y to get the part, but once they had the part, I just dropped off the car and like everything was taken care of, and like all the insurance was paid for, and like it was great. I mean, it was as easy as any experience could be,
Mhm.
but it wasn't. I mean, the main thing was it wasn't worse than like what you would have gone through with Geico or whatever. And it was, I would say it was
Mhm.
probably better, but like if it's the same or better and the cost less, like it's like a no brainer. And I think that's like the reason why you have to think like, why
Well,
would they do this? It's like to make the whole experience better.
and think about the cost benefit also in like knowing who is at fault. Like how much money is spent in the legal, I mean, so many times crashes are just litigated to the nth degree. And this insurance company has their lawyers and this insurance company has their lawyers, and they're like fighting who was actually at fault and to how much. And like, oh yeah, we actually had 360-degree visibility by cameras. We know exactly what happened. We know exactly who was at fault. And like, we don't have to fight in court over how much this person was at fault and how much that person was at fault. Like we know within an hour of
Yeah,
review of the data, and we don't have to fight about this. And like
that's interesting.
lawyers' times are expensive.
Yeah, that's a super awesome point. I wonder if they do
Yeah.
have that data. I mean, they should, right? I just who knows about the integration between insurance and the rest, but you would imagine that they could just say, okay, give us this file from this person. Yeah.
Yeah, I totally agree with you, Hans. And it was interesting. So yeah, I would say, obviously, that's a very specific case scenario. And I would say the majority of insurance losses look nothing like that. They're very case closed. As soon as, a report comes in, everything's pretty black and white for 80+% of insurance claims. So with the original Tesla Roadster, Carl Medlock, who's a guy, he used to be a Roadster technician. He has a shop up in Seattle, Washington, that works on a lot of the original Roadsters. He was telling an interesting story maybe a week or so ago on the Roadster Facebook page. And he was saying that in a litigation, even back then, he was able to just plug in his laptop to the original Roadster and grab the data files and prove that some guy was going under the speed limit in a lawsuit. So that was a pretty interesting story about, obviously,
Mhm.
Tesla has had so much data even since like 2008 on their cars.
Yeah.
Do y'all think? So where my head went when you guys were talking about I love how I use y'all and you guys in the same sentence. What am I doing here? My God, I'm so inconsistent.
You're slowly becoming a Texan. That's what's happening.
Yeah, it takes time. It's the y'all is so when I'm talking to other Texans in the room, it's all y'all. But when when I hear you guys and y'all, then anyway, this is why am I talking about this right now?
Guys.
Yeah, y'all guys.
Nice.
The where my head goes towards is Tesla lifestyle ecosystem. Right? We're talking about this sort of insurance thing that's going to cover everything about your car. We have the car driving it, the car's going to drive itself and it becomes an entertainment hub. We've talked about Tesla solar panels and power walls and all these things. God knows how many other products Tesla's going to come out with. HVAC, I don't know, homes, who knows? Like to me, these are all pieces that are starting to sort of fit into a equation that becomes like a lifestyle ecosystem. Like everything that you do is going to be that you touch or interface with on a daily basis, or most things are going to be handled by this entity called Tesla. And it's not just cars, but it's the insurance for your car. It's not just your home, it's also the insurance for your home and your power grid and how it generates electricity. Like Am I thinking about this too crazy? I'm just throwing it out there because my brain immediately went there. It's like everything's handled for you, and we got it. Like you don't even have to like the shopping. Who knows? Maybe down the road, with the transportation and the bot, Tesla's going to offer you a service to just take all the shopping for you. All you have to do is go on the Tesla app and put your weekly groceries in, and a bot will show up with a FSD car. And it's just going to deliver the food for you in your Tesla fridge, which is the most power efficient fridge in the world. And it has incredible technology. And it's going to know exactly when you're running out of, like, this is where my head goes. This is where my head goes. Am I stupid? Am I crazy? Is this way too far down the line? Are these the beginning pieces? Is Tesla thinking about this? I don't know if we even want to make this a topic, but that's where my head goes when we talk insurance in the long term. I'm crazy. You can just say it. It's fine.
So the thing that I always think about when I think like all the possibilities that are out there is like there's a limit to the amount of like to the size that society will tolerate one company being. Like there's a political, sociological limit to, y'all just make way too much money and you do too many, like that's just not cool. Like we can't handle that.
Okay.
I think part of
at some point, go ahead, Jared.
Supply of resources and time, And I think one of the things that makes me like, super bullish on Tesla and just like in general supporting of it is you just think about Elon and like, all right, look at pictures of Elon when he like started Tesla and look now, obviously he's aged a lot, but he's spending his prime years at Tesla. And, that's not going to last forever. So I think it shows the importance of the work he's doing and Tesla's doing right now.
Yeah.
But it does. Go ahead, Rodman.
I was just thinking that, there's going to be more spin-offs. That's the main thing. It's either going to be companies that are started by people who are formerly Tesla employees that are thinking about solving these problems. But like, there's only so much that I feel like Tesla can put under its umbrella before, like you guys said, like it becomes either untenable to peeps, to society, or to regulators, or even to the society, right?
And mission creep too. But one of the things to think about in that is like it's pretty easy to identify lots of areas where they could go in and dominate a marketplace. And so they're obviously not going to pursue any and every one of those opportunities. But what you do know is that through observing Elon over time, that he knows what is the highest leverage point that I can focus time, energy, and resources. And so if you can identify 100 ways that they could make a shit ton of money, and Elon doesn't choose those things, it's because he found a better one. And so like you can extrapolate that into, this is one of the ways that I think about Dojo. People are like, well, is Dojo going to be a waste of time? Is it going to be a waste of money? Is it going to be a waste of resources? Could they have just waited for an NVIDIA GPU cluster? It's like, if Elon can put together a massive, AWS size server farm somewhere, I guarantee you that Tesla can figure out a way to monetize that at least 50% as good as Amazon monetizes theirs. And like, it's probably multiples, an order of magnitude more, but we'll just even say conservatively, like how much does AWS make in revenue off of a server farm the size of Dojo? And then we can just assign like conservatively, okay, at least half of as much of that we'll give to Dojo. And so, that's one of the ways that I think about those opportunities that are out there.
I think part of it, you have to return to the mission too, though. When we talk about like, Farz, you mentioned refrigerators. Like, are refrigerators improving people's lives by making them, more efficient or whatnot?
By advancing the avenue of sustainable energy.
If we can fit 2 million hamsters in a refrigerator, it will improve everybody's life.
Everybody knows this.
But I think, going back to what I was trying to push at with like Elon spending his prime years at Tesla is just like the importance of the mission is obviously so much further than just making people's lives easier. And obviously, with a lot of the Tesla talk, we can sound pretentious in our first world and stuff like that. But it's going to trickle down throughout other countries and, through time with the work we're putting in these formative years.
So So that mission statement is such an interesting point, though, because Tesla getting into the bot is already a deviation from that mission statement, one could argue. So what's the likelihood that the mission statement changes to try and encapsulate more of those product lines that seem extremely unlikely now, but become more likely because their engineering prowess is just where it is right now? Like, could the bot signal that transition? Because the only way I could because if they execute bot at the rate that they would execute everything else, like, one could make the argument, yes, it's helping accelerate the advent of sustainable energy, because the bot's going to become crucial in ensuring the scale gets there as quickly as humanly possible. So I could see that. But then what's the likelihood that Tesla just changes its mission statement to ensure that the future of humanity is good? Then why wouldn't a super powerful, amazing fridge be part of that? If it's tied to the automated, to a bot bringing everything for you, and which frees up time for you to pursue your passions and to ensure that you're building a better future. I don't know, but curious to see if that becomes a reality or not.
Mm-hmm.
Yeah.
Yeah, it will be interesting, because I think obviously, like, Elon and the Tesla team are looking to where things are going just in general with something like the bot. And obviously the big first transition was when they went from Tesla Motors to just Tesla, and the mission statement changed from sustainable transport to sustainable energy. I could see 10 years from now the mission statement changing and them narrowing their focus on something else as opposed to just energy more broadly.
Yeah.
Yep.
It's gonna be fascinating to watch.
I still kind of feel like, sorry, the bot kind of fits in with the mission. I mean, like, if you use the bot to build other things, right, in a sustainable way, right? So the bot's driven by like probably solar energy or sustainable energy, and then it's contributing into building things faster and more efficiently. So that's more vehicles out there.
Yeah, we didn't talk about that question yesterday with James, and it was one of the ones that I was kind of excited to ask him is, what role does he expect TeslaBot to play in Master Plan Part 3? Like, is TeslaBot a key component in being able to reach massive scale for Tesla? And I kind of think that it is. I think that's why, as Elon has been hinting at Master Plan Part 3, it correlates with the timeline that he's been hinting at or talking about TeslaBot. And so it probably is tied in there. And I think the implicit, maybe the functional mission of Tesla right now is solving the world's hardest engineering problems that specifically get in the way of a sustainable human presence on Earth.
Mm-hmm. And so, Mike, go ahead.
Yeah, so like if you think about a refrigerator, like the work that they've already done with Octovalve, they've solved that problem, and someone else can take that solution and now go apply it in an incremental way to refrigerators. It's not getting in the way of being able to improve the sustainability of humans on Earth. Like, they've got more important engineering problems to solve.
Yeah. So boats and planes before fridges is basically what you're saying. Yeah.
Definitely.
Got it. I don't understand why fridges are. I'm just kidding. Rodman, go ahead. You were saying something before.
No.
Unless you forgot.
I'm thinking, like, it's an interesting problem. Like, I mean, my refrigerator spits hot air into my house, right? So that's counteracting like all the stuff, and then I have to recool. I have to either AC or like use other methods to get that temperature out. Like, it does make sense to like have one central like octovalve that's like doing all this stuff, like heating up your water or taking the heater from my refrigerating my water and putting it into my my water heater. It's just like, how much resources does Tesla have to put towards that? And I think it's just
SpaceX will do that job when they're working on developing HABs for Mars.
Yeah. And then it will roll out to people hopefully on Earth, but no.
Yeah. There is a
you're
Jared,
on
you're
mute,
muted.
Jared.
Thanks, guys. Yeah, I was just gonna say, it's funny we keep bringing up this fridge example. I actually do know a guy who has a Tesla refrigerator. I have to ask him the story on it though, because it looks pretty official. He was a former Tesla employee, so I don't know how he got that, but I'll have to ask him about that. Nothing revolutionary, but it's just a normal fridge with Tesla branding on it.
I wonder if he just took like the logo from the Model S and just like Tesla logo on the fridge. Go ahead, Hans. I don't know if you're gonna say something.
I was curious what Chuck was.
Oh yeah, I got paywalled.
Referencing.
Let me pull it up. This is what it looks like. Can Tesla data help us understand car crashes? Article from New York Times, August 18th, so yesterday. But create your free account or log in to continue reading. So if I create a free account, we'll do it. Okay, give me a second, so nobody knows my password. Okay. Continue without subscribing. Welcome to the Times. All right, we're in, guys. Here we go. Just maybe later. Leave me alone. There we go. So there's this link that Chuck Cook shared in the chat, and looks like they were already talking about Tesla data helping us with crashes. After the collision, Mrs. Ford told police officers that autopilot at Tesla driver assistance systems had suddenly activated her brakes for no apparent reason. She was unable to regain control before the Acura crashed into the back of her car, but her description is not the only record of the accident. Tesla logged nearly every particular down to the angle of the steering wheel in a millisecond before impact. Okay. Oh, look, so there's some... Oh, this is like a whole interactive thing. Okay. So I guess the point here is that Tesla is already collecting a gigantic amount of data, and I guess New York Times is making a piece around it, right? Unless there's something I missed, Chuck, let us know in the comments, but this is what that looks like. Oh, look at this, frame by frame. Less than a second after the crash. Okay. So I guess, is there something with Tesla slowing down and then getting rear-ended? I guess. What do y'all gather from this article?
Keep scrolling, or like beyond this. Okay.
Yeah.
Okay, so experts say this data could fundamentally change the way regulators, PD, insurance, how they investigate everything. More accurate,
Cool.
less costly. Yeah.
Okay.
Tesla,
Awesome.
by contrast, is a constant stream of info.
Well, and I'm sure that this is going to be an incredibly pivotal capability to have as we transition to robotaxis, because they're going to want to know everything about how and why automated car crashes occurred. And so being able to provide this level of detail so that you can also then create a root cause analysis, and whatever your corrective action steps are going to be afterwards is going to be critical.
Keep scrolling, please.
Sure.
Yeah,
and then
in a new paper, he argues all car makers should be required to collect this kind of data and openly share it.
There's a quote that Chuck shared that I'm trying to find in the comments section. Let's see. Chuck. Okay. Oh, maybe did it DM me? Did you DM me, Chuck, or is it in the comments section? I can't find it. All right. There was one other thing I wanted to cover before we wrap it up. Just real quick. Yesterday's Flex Alert saw the first activation of the PGE for Me plus Tesla virtual power plant, and the world's largest distributed battery sure did put on a show. Nearly 2,500 PG&E customers delivered up to 16.5 megawatt of clean solar power when it was needed most. And this story to me seems to be flying extremely under the radar. that energy is starting to make some legitimate differences in homes already in parts of the country. Did y'all see this by any chance?
Yeah, I
Just-
saw this tweet before we got on, and I was hoping that we were going to talk about it.
Let's talk about it. What do you got?
Yeah, I think this is super exciting. The ability to, so, you know, a lot of people don't understand how power grids work, and we don't have good ways with the old technology for power to store energy at the system for use on demand. And so when, you know, it's, say you're hitting 3 o'clock or 4 o'clock in California, it's super hot outside in certain periods of or certain areas of the state, and everyone is coming home and they're flipping on their AC at the same time. Like, there's a huge spike in the amount of energy that is being pulled off the grid. And so the grid has to be able to respond to that. They can't like store up electricity before that time and then be like, okay, here it is. Now we're just going to release it out onto the grid. They have to actually scale their production at the same rate as demand and try and match it as closely as possible. And so, you know, there are various technologies that we get power from. You know, some places still have nuclear, which is a great base for your power generation, but that's like constant. And you can't just like, oh, hey, we're going to ramp up. Now the nuclear is producing 2 times as much power as it was before. And so you've got different types of technologies. You know, hydro, you can't get a bunch more hydro quickly. So typically we use coal-powered peaker plants because those are the fastest to dynamically adjust to the load that is being put on the system once it goes past a certain point. And you can think about it like, so if like steady state or average demand is here, and you got like a peak that's here, well, you're probably going to have a power generation capability that's somewhere below the peak. And most of the time, you're actually creating more than you need. And so you're trying to find somewhere to send it. But you don't have an ability to store it. So you've got to send it to another grid somewhere else that can use it right when it's being produced. But then when it peaks over, like, well, how do we get more? And so, yeah, that's where the coal peaker plants come into use. And so here, what this is saying, hey, we can either have batteries that are distributed battery systems, which is what we have here, or like megapacks. But either way, if we have enough battery storage connected to the grid, then we can actually save. And it's, you know, the same idea of for people who live in areas where they do prorated electricity charges based on the time of day. Like when it's cheap at night for you to charge your car, you can do that. Or if you've got a power wall at home, you can charge up the power wall when the electricity is cheap, and then when it's expensive, you can draw off your batteries. So this is the same exact concept, but in reverse back to the grid. The grid can store up power in these batteries when power is cheap and there's not as much demand. So their supply is over their demand. That's why it's cheap there. So they can store that up. And then when they need it for that peak moment, they can draw off the batteries instead of have to ramp up, you know, some coal-fired power plant in order to keep the grid from going into rolling blackouts when you peak out over your constant state generation capability.
Yeah, like the anticipation of those spikes requires even a lag time for these factories or for these generators. Like a peaker plant, they have to like anticipate how much there's going to be and like try to match that. Whereas a battery, you just pull as much as you need, right?
Mm-hmm.
It's like,
yeah,
so,
as long as it's there. Yeah. It responds instantly. And so they far outperform a peaker plant in their ability to stabilize the grid. And then this is like one of the huge arguments against sustainable energy sources is that the more that you use an intermittent energy source like solar or wind and not nuclear, the more flexible options you have to pair with that in order to stabilize your grid, because you don't know when, it's harder to anticipate what your needs are going to be. When do you need the peaker plant? How many peaker plants do you need? And this is why Elon has always said that the correct solution is solar and wind plus massive batteries, that you have to have the batteries in order for using sustainable electricity sources to be feasible for a grid.
Yep.
And so this is why in like places like Germany, where they have lots of solar and wind, but they don't have the batteries, it's kind of an energy situation catastrophe.
Yep. Well, it's bearing fruit in Australia, and now should be in the US. So it's great that we're just using these things that people use on their house to kind of provide their own resiliency through these blackouts, that now we can use these as their own like mega packs in a way, and you can make a little money off of it. So I think that's what's super exciting, is that there's an incentive to do it, and we have the people are installing the technology to do it, and we're just using what's out there, and it's just a net benefit. I mean, it's like a huge win-win. Like I just can't see any negatives about it.
Yeah,
Marcus
I find it
says spot on,
fascinating.
Hans.
Yeah, he's calling you out for a job well done. I just find it fascinating that it's still flying under the radar. I mean, probably rightfully so, because it's been ramping I mean, it really was de-ramping for a little while there. Energy's side of the business, but how under the radar it's flying, that it's really going to be I think it's going to surprise a lot of folks once Tesla pulls the usual S-curve that they do with these ramps. And then they're like, oh my God, what happened to energy? It's doubled in the last year, it tripled in the last 2 years, so on and so forth. So, Jared, I don't know if you had any thoughts around this specific topic.
Yeah, I mean, that specific comment, it's an interesting crossroad that they've been at for a bit here, because when we talk about going back to the car demand, Elon's talked about how energy hasn't ramped up as much as they would have liked to have, because putting batteries in a power pack or a mega pack is just taking away from cars that they can deliver. So you just hope that they can get their supply for the car side just exponentially greater, so that they have the time and energy and resources to focus on the energy side.
Yeah. So power pack before refrigerator, Farzad. That's the answer to your question.
Maybe we'll use that to end the stream. Is there anything else y'all wanted to hit before we wrap it up?
I guess, yeah, just to put a fine point on it, that it really is a huge, like, it is a tangible first step that, supply notwithstanding, that this has been theorized that this is what we can do for a long time. But seeing a virtual power plant operating in the United States for the first time, I think they've done some testing in Australia with their projects down there. But, PG&E is one of the biggest utility conglomerates in the United States. So for them to actually have in the books a proof of concept that performed spectacularly, at least to the level, if not surpassing the expectations, it's the type of watershed moment that will be looked back on once we start fixing a lot of these things in the future as a major pivot.
For sure. Rodman or Jad, any last thoughts?
I think we indirectly, have been around it, but we're talking about the energy side of things, and going back to the bot and the mission statement earlier, it's almost like they don't have the resources right now to really push on the energy side of business. So in the meantime, they can work on AI and push that leaps and bounds and stuff like that, while they're almost having the energy side on pause.
Yeah.
That's a super interesting way to think about it. Like, what's the, like, Elon thinks at the bottleneck, right? And like, if you thought about like what the production line is, like, he sleeps at that bottleneck. But like, maybe what's happening now is, instead of focused on like this kind of micro scale, I mean, relatively small scale, like the production line, he's now thinking maybe at a larger scale. It's like, how can I get this whole thing moving more rapidly? And maybe that's Optimus. Maybe maybe there's there's got to be a lot of other things that they can do right now to throw money at this problem, and just accelerate it. And that should be exciting for Tesla investors, right? Because like these things will bear fruit, and we're still so early days, right? Even though like so much has happened in 10 years.
Yeah, pretty wild. Shout out to Jared for stepping up and going live. Great job, dude. You're a natural, bro, for your first time,
you did great.
man. You such a good job. Super value add. Thank you all very much for joining today's stream. Thank you, Hans. Thank you, Rodman. Thank you, Jared. Plug y'all's Twitter and stuff. So it looks like we got Hans's already up there, right? Web3 Lon?
Yeah. I took a cue from Tesla Boomer Mama. She did that. I was like, oh, that's smart. I should try that.
Yes. Rodman, did you want to plug yours by any chance?
Yeah, mine's at Rodam, Rodamn. And
Okay.
That's me.
I
Jared,
don't
do you
post
have a
much on
Twitter?
Twitter. I just follow people, but it's just Jared Crano. Crano is my last name.
Perfect. Okay. All right, everybody. Thank you very much for joining. We'll see you next. Actually, I'll be traveling next week to Pennsylvania, but there will be a video that'll launch on Thursday that I'm finishing up right now. We'll go live on that day. That's going to be my last, the only video probably for next week. And then the week after, I'll return with the usual schedule. So thank you all very much for joining. Thank you, panel. Have a great rest of your Monday. I'll see you later.
Thanks,
Just kidding, it's
everybody.
Friday. Bye. everybody.